Hello everyone and welcome back to today's more important Tuesday the 27th of January with me, Rich Pro Market Analyst at Handtech Markets. Let's move on to Euro Dollar now, and it's interesting because is Euro Dollar engaged in a little bit of a recovery now? This is the daily chart over the course of the last 8-10 months, and I had to draw in a sharper downtrend line because Euro Dollar has accelerated so far away from its main trend line. So if I zoom in here, you'll see that in more detail. But we've had this sharp move to the downside on the back of that ECB QE announcement. But in the last couple of days, there's signs of a possible technical rally going, and it doesn't really show through very well on the daily chart because the momentum indicators are not really reacting to, they're not really showing any signs of bullish divergence or anything like that. However, on the intraday chart, we do have this small base pattern that's now completed. Move above, sort of, say 12.95, because that was a reaction high that we saw yesterday evening. And you've sort of accelerated through that today. You burst through that. If now Euro Dollar can start to sort of form a bit of support around that 13 big figure level, then maybe the prospect of a technical rally is going to start to come through, because you certainly got this prospect of a base pattern here. In isolation, that is obviously a positive, but you're not really, as I said, showing too many signs on the daily chart, and there are not too many indicators that are backing up a potential technical rally. But still, there is a certain amount of buying that has happened and has pushed Euro Dollar back through 1300, and it's perfectly possible that the market's got so short that a little bit of a short squeeze could come through on this Euro Dollar chart. So very interesting. Also, I will show you that chart that I showed you yesterday actually as well, because this is the weekly euro, and that has certainly bounced off that 100% Fibonacci projection level, which I talked about yesterday. And that certainly seems to be the support that's coming in at the moment. So that is interesting, and the prospect of at least a consolidation around these levels, if not maybe a technical rally, is fairly reasonable, I'd say, in light of that move. Anyway, so if we can sustain this break above 113 figure, then we could start to sort of think about a calculation of this base pattern target, which gives you around about sort of back towards the key breakdown of that old range around 114.60. So that would be where my first level would be coming. That also sort of coincides with this falling 200-hour moving average, which has been a basis of resistance actually through January. So that comes in around that level as well. So it's perfectly possible we could be going back towards that sort of level if it can hold this move above 113. Interesting also that the big technical rallies that we've seen on Euro Dollar in January have all sort of floundered around that 70 mark, and that's again where we've seen that. So I think I'm not going to get too excited yet. Also with the MACD lines again not really showing too much sign of anything other than a bear market rally. At the moment, there is an early sign of this being a technical rally. I'm just waiting for confirmation of several other indicators before getting too excited. But I think holding above 113 figure would be a good sign. In terms of support, you'd certainly think about these reaction lows, which come in around 12.20. So that's if you see Euro dollars breaking back below 113 and then drifting back below towards like 12.20 area, I think that could be suggesting that the bulls have lost the recovery. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.